Ladies and gentlemen, so glad you're here hanging out with me, the Mayor Heath Sharon, for day 2 of the Accelerate Main Stage sessions. You see, last week we went through day 1 with Amy, Zupon, and James Tom. Pretty special episodes. They made some pretty cool announcements. They discussed some really cool topics and some products that you need to pay attention to for next year. And if you didn't get a chance to listen to that one, go back and check it out. This week, we have yet another exciting episode. We've got a panel discussion this week, and let me set this up a little bit for you. This panel discussion is facilitated by Teresa Chia, our Chief Financial Officer. She does a phenomenal job with some pretty heavy hitters here. We got Charles Symington of the Big I, Bobby Reagan from Reagan Consulting, Stephanie Bush, recently retired from Hartford, but still full of fire and passion for our industry. And then we've also rounded out, we've got the Viewpoint's founder, Drew Aldrich. But make sure that you get a pen and paper out because there's a lot of interesting facts in here, a lot of cool discussion here as they get into hard market, talent acquisition, technology, and then of course we couldn't have this without talking about AI, the hottest topic in our industry right now. Sit back, relax, and check out this phenomenal panel discussion. Welcome to the VIP podcast. Let's go.
Good morning, good morning. Well, we are in for a treat today. So I am so honored to moderate today's discussion with our esteemed guests, focused on the market trends and industry dynamics that are affecting your business here and now. We have just a short hour together, so I will talk very little. My focus is to get very specific and actionable insights from our guests that you guys can take back and action against to accelerate your business in 2024. Let's kick off with a bit of audience participation. As everyone knows, we are several years into a hard market. In every hard market, there's pain points and there's opportunity. I'd love to hear from you, net. Please clap now if for your agency, your carrier, or your MGA, it's been a difficult operating environment. And now clap if net, it's been ripe with opportunity. Very interesting. So I'm hearing more difficult, but quite a few that have had quite success and opportunity as well. Let's unpack that with our panelists. Charles, let's start with you. So, as the intro said, you've spent your entire career lobbying on Capitol Hill on behalf of the independent agent channel. And now as the CEO of the Big I, you certainly have on-the-ground insights into what's driving that feedback. Tell us about this hard market and what you're hearing from agents.
Yeah, thank you, Teresa. Thank you for having me here this morning. And yes, in my role as president and CEO of the Big I do quite a bit of travel. And what I've really been struck by is I've talked to veterans of the industry, right? Agents that have been in the industry 20, 25, 30 years. And they're telling me that this is the worst hard market that they've ever experienced. And and these are agents that have been there and done that. They've gone through different insurance cycles previously. And so that's really stood out for me. The other thing that's struck me is just when you look at the geographical scope and size of this current hard market, it's not the usual suspects like the state we're in right now or Florida or California. It's more national in scope. And so I think that's very different. Our agents are feeling it in some states that they're just not used to it, right? It's a new challenge for them, maybe a new opportunity for them as well. And then finally, it's also kind of the breadth when it comes to various lines of insurance. Obviously, it's property. Everyone gets that. But it's beyond just property. You're seeing it also in liability. You're seeing it personal lines. You're starting to see it in commercial lines. And we may have a chance to talk about some of the causes for the hard market, and I think that speaks to those causes, how it is very complicated and it's difficult to unpack it. And there's no simple solution to this. And I think that's why this hard market is lasting as long as it has.
That's great. Thank you, Charles. Bobby, 4 decades in the insurance industry. You've seen your fair share of hard market cycles. You also, at Reagan Consulting, have consistently tracked the performance metrics behind the distribution channel. Unpack for us a bit, what are the quantitative metrics that you're seeing right now for the distribution channel? How are we doing?
Good, thank you. Great being with you, thanks. We do track a lot of data. We do research with the best practices study that we do in conjunction with the Big I, with the growth and profitability study we do on a quarterly basis, with the consulting we do with hundreds upon hundreds of firms every year. And perhaps the most interesting thing that we're seeing is growth. You look at the largest firms, 10 years ago, there were only 2 insurance brokers that had over $1 billion in revenues. Today, there are 18 brokers with over $1 billion in revenues. A lot of that from acquisition, but organic growth. But organic growth is really the story that's fascinating. If you look at the median insurance agent, half better, half worse, their growth in 2023 was over 10%. If you look at the last 5 years of growth, the median firm is 50% larger than it was 5 years ago. And if you look at the top quartile firm, still 25% of the agents are growing faster. Their revenues have almost doubled in the last 5 years. That is tremendous. That's great. I mean, that's what you want to accomplish, but it does create a lot of challenges because as your organizations have that much growth, you have to adapt to infrastructure issues, leadership issues. Firms that had part-time leadership need full-time leadership. You have to change infrastructure issues with HR, with IT. You have to change how you're operating as a larger firm, and that's created challenges, but also lots of great opportunities. So growth, it's exciting, but it also creates challenges.
Well, I'm really excited to unpack that further in terms of what our agencies can do out today. Stephanie, so that kind of tees you up for an interesting question. So you spent 36 years with the Hartford, most recently as the head of small commercial and personal lines. So you definitely have the risk-bearing carrier's perspective that's going to parallel the distribution perspective in this hard market. There's an interesting dichotomy right now when you look in the news for the top P&C carriers. They're simultaneously announcing record top-line growth, as Bobby was alluding to, record profits, but also announcing pretty significant layoffs. What's going on with that?
Yeah, you know, excuse me. Good morning. Thank you for having me here. It's only been 5 weeks of my retirement. So I'm still fairly current, and I did go through the last earnings cycle. Just want to put that out there. But I love headlines. So in January, the Wall Street Journal put out an article that cited exactly what you stated. And so, you know, I read that, and I'm like, oh, you know, the general reader is not going to fully understand, you know, the complexity of this environment and seeking to unpack that. So there's 3 points I'd like to share on your question. So let's bring it up a little bit, and let's start with the positives. So when I think about the US economy, it looks like we're going to get past and not have a deep recession that the economists were forecasting. So that's a positive to Bobby's point. Is everybody aware that in 2025, the expectation for direct written premium for the US for our P&C will be $1 trillion, largest ever. So that's a lot of opportunity. Looking at it from that perspective, unemployment still really low, roughly around, you know, a little less than 4%. Still seeing wage growth. So all of that creates opportunity. So that's to the positive. The watch areas, and I'm not going to get into political comments, is that we know we have an election, and that brings uncertainty into the markets, uncertainty into regulation, legislation, and so carriers are kind of watching and anticipating that. And then you think about the geopolitical aspects. And so you might be saying, why would the carriers be watching what's happening in the Red Sea? Why are they so focused on the tragedy that happened in Baltimore with the ship hitting, you know, the bridge because of supply chain? We just went through one of the worst supply chain events in my 36 years that I saw. And all of that tracks with why costs were rising, a big piece of that. So those are some of the watch areas. Now let's talk about those big profits. So you got to get underneath the covers And so sometimes it was for the fourth quarter, not the full year. Sometimes it was new business. Sometimes it was rate achievement, but still looking at their in-force book of business still needs rate, not keeping up with loss trends. So you got to get into all of that. So would it surprise all of you that 2023 for the P&C industry, so I'm talking about all lines, was the 5th most unprofitable year since 2001. 5th most, worst since 2017. So an all-in combined of 103.7, I think I have that right. And if you take out the impact of positive reserve development, that's a good guy, it was actually over 104. So it's still not profitable. Would it surprise all of you that the expectation for the industry for 2023, the return is about a 7 ROE? So the carriers are not covering the cost of capital. So the need for rate and staying ahead of that, and then understanding those inflationary pressures, which Charles and Bobby hit on with property, auto, social inflation, general liability, there's still a lot to navigate through. And then my final and third point is carriers doing layoffs and that. I'm not going to speak about any particular carrier and that. But I will ask you, when you're working with your carriers, is if they were healthy going into COVID, in terms of strong reserve position, rate adequacy, strong expense management discipline, strong underwriting quality, strong distribution management, and that they might have had some speed bumps, but they navigated that. If they were not disciplined in their fundamentals and had not taken rate for years, you see that. So not every carrier is on the same playing field.
Interesting. Thank you for that. Drew, so you have had an unwavering conviction in the long-term viability of the independent agent channel and the value that technology can bring to accelerate that independent channel. Yeah. And in fact, you've had such a successful venture capital career that you've raised your own fund. Congratulations. Focus solely on this space.
Yeah.
Help the audience understand, what technology are you seeing that's current, viable, actually being used out in the jungle today by agencies that are allowing producers and servicers to do what matters most: focus on growing, retaining their books of business.
Yeah, and also thank you for being here. It's really an honor. As Teresa said, the fund called Viewpoint, we're dedicated to the producer. That's our through line. We look at producers everywhere we find them. We find them. It all sort of came about from the last 10 years in insurance-focused venture capital, but you end up, you find producers in many industries: wealth management, real estate, and then what's funny is there's sort of a long tail, and that's what we feel like the big opportunity is. That's what we feel like we understand, and part of the reason is because of sort of what went wrong a little bit. We think in venture capital over the last 10 years, targeting insurance. Insurance is sort of a particularly interesting use case. I think our perception is that in 2014, 2015, the venture capital industry sort of discovered that there was this really large market called insurance, and there weren't a ton of startups. And they attempted to use a model that they knew had been successful in other markets, which were two models in particular: software as a service, so it's when you sell individual software point solutions, and also direct to consumer. And so that was the incredible boom of direct to consumer carriers or direct to consumer brokers. And they sort of crashed on the rocks of that. It doesn't really work. In any producer-led industry, our theory is because the producers are the primary driver of value in the industry. It tends to be because the manufactured product tends to be particularly commoditized, but also we believe that the existence of a producer in a market is indicative of broader-based complexity. The complexity on getting the consumer or whether we're talking business consumer or individual consumer, getting them the peace of mind to purchase, that they are making the right decision. There's also operational complexity about, there's literal steps that have to be performed after the sale. So there's sort of, you gotta find and cultivate the lead, you've gotta convert the lead, and then you have to actually operationalize that conversion into a sale. And the venture capital community trying to go around that core entity in the market, it just didn't work. And one of the things I think is most ironic about this is venture capital is supposed to be all about disruption, right? That's like the key term in venture capital land and tech land. And venture capital thoroughly did not disrupt insurance. I think, looking back, we sort of now all see that's true. What makes that particularly ironic is that private equity, which is a different market, right? Think venture capital is the, super tech startup out of Silicon Valley. Think private equity as the more maybe cerebral and number crunchy sort of, and in venture capital land, we don't think of them as the most innovative. Yet at exactly the time that venture capital is failing to disrupt these industries, private equity is doing a very thorough job of it with consolidation of distribution, consolidation of producers, and they did an incredible, still to this day, some of the most important disruptions in insurance are happening on the balance sheet side, the liability side, the alt asset, private equity firms really innovating on the types of assets that they can invest in, and thus the type of risks they can sort of be the balance sheet behind. And so the fact that PE really was disruptive and venture wasn't, I think is an incredibly sort of understood story of the last 10 years. To your actual question about where we're really excited about, almost by definition, because we believe producers are the entities that actually create the vast majority of the value. All of it sort of centers right there, and a lot of it has to do with this broad idea of the most important piece of value is those producers finding clients, closing clients, and that's actually where the real value is. Operationalizing that, getting that to completion is sort of less critical. And so the mission is, if a typical producer that we see is spending between 40 and 50% of their time on revenue producing activities, finding clients, closing clients, building relationships to drive new clients, we're looking at technologies that sort of systematically offload all the crap that is not in that time, so they move to more like 90%. What's interesting about that is that tends not to be individual software solutions. They look and feel different than traditional venture models. They can be a marketplace, or they can be a sort of holistic platform. So those are the things, and then I'm sure we'll talk AI, because if you're talking to a venture capitalist, you can't not talk AI, and AI will play a big role in this too.
Drew, I'm going to be pushing you for some specifics here.
Amazing.
We need to know the companies that our customers should be looking at. But I think what's interesting as I listen to all these comments is there's so many different areas in which our thriving agencies have considerations. So which geography you're playing in, which line of business you're playing in, the relationship you have with your carrier, the technology that you're using and how you're using it. Let's unpack a bit for those who are successful in the room, who applauded in the second category, who are doing really well, who are growing at those organic rates that are incredible, double digit. What are they doing specifically that differentiates them from the pack? Bobby, let's start with you. You clearly advise so many different agencies and work with so many on their strategic growth initiatives. Tell us a bit, for those clients who really stand out to you and have been doing incredibly well, what are they specifically doing that makes them stand out?
There are a couple of things that I would say. Probably at the top of the list would be specialization. I think so many agents, and this has been a trend that has occurred over many years, agents are finding that if they can concentrate in areas, not one, but several areas, where they get really good at contractors, where they get really good in particular areas, industries, niches, it is a competitive advantage, a significant competitive advantage. It is one of those things that allows a small independent agent to compete against the biggest brokers, by becoming really good in some areas where they know the coverages, they know the markets, they've got expertise. The other thing that specialization does is it broadens your marketing territory. Because when you're writing a bunch of a class of business, if you go 100 miles away, you've got a customer list that gives you credibility. And so specialization is one of the things that agents are doing to set themselves apart. Still, the single most sustainable competitive advantage that an agent can have is people. Having better people, better trained people, better motivated people, employees that have a commitment to excellence, customer-centric. It's having good people. It's the basics. I mean, that's what drives the insurance agency business, including producers and support staff. Then the other thing related to people is culture. I mean, the best firms that we see are firms that have excellent cultures. They're energized. They're places that people want to work. They're firms that insureds like doing business with because they're responsive. They care about the insured. They care about each other. And we're seeing a lot of agents really separate themselves by specializing. There's generalist books of business that you would have in the community that you're in, but finding multiple areas where you can get a producer that's going to specialize in an area and get really good at it, as well as continuing to upgrade your staff and creating a culture that is exceptional.
Bobby, you're bringing up something that is constantly discussed in our industry, which is the talent aspect. I'd love to hear from everyone else too, but clearly, we hear from so many of the leads of our agencies, hey, my kids don't want to run this agency. I can't recruit 20-somethings. They're really excited to join the fancy startup, the technology business out west. I don't know if I have succession in place. How do I get that young talent that's super excited? How do I get them to join the insurance agency business? Any advice there? And I'll ask you this, Bobby, first, and then I'd love to open it up to everyone else.
Yeah. I think we have to do a better job at selling talent, don't we? I mean, selling people on our industry. It's not a sexy business, but what a great place to have a career. Many people here, I have. But we've got to go out and convince people and sell people by bringing interns in during summers in between college years, by doing a better job of explaining and presenting opportunities to young people. I just think we have to do a better job of selling it, and if we do, it will sell itself.
Charles.
I couldn't agree more, and that's why at the Big I, we have our Invest program, which deals with high school students and financial literacy so they understand insurance from the ground up. But we're also looking to now expand the focus of Invest to community colleges, junior colleges, second careers, to bring more talent into the industry, to explain that story, the entrepreneurial spirit, the opportunities that we all know so well. And if you take it from kind of the cradle, and then you bring them into the industry, they need to teach them how to do it the right way. And we have our Young Agents program so that they can socialize and learn from their colleagues and come to Big I events and also get mentorship from those agents that have more experience. And then at the Big I as a national association and through our state associations, we try to give those agents the tools they need to be successful. And of course, right now, we're singularly focused on how we can help our members navigate through the hard market, whether that's through additional investment in our for-profit operations and our market access programs. Drew and I were just talking in the back that we just started our own alliance, Big I Alliance, that is specifically tailored to the smaller and mid-size agents to help them get those markets during these very difficult times. We talked earlier about some of the conversations and the hustling that agents have to do in their hard market. So we have our hard market toolkit from Trusted Choice to give our members those talking points, to have those conversations. And then, of course, at the Big I, doing what we do best, which is advocacy, at both the state and the federal level, whether it's certain ways to modify the federal tax code to incentivize the hardening of properties and mitigation efforts, or at the state level, supporting fair plans in certain instances where we're seeing private marketplace failure. So we're trying to throw everything at the wall that we can, to get our members through these very difficult times.
Charles, I'm impressed. You wear Trusted Choice socks.
Well, thank you. Yes. And,
You are
and a
committed
lapel
to
pin. Yeah, always on message and always on brand.
There you
I
go.
love
Thank
it.
you, Bobby.
That's fantastic. I'm looking forward to getting my pair from you, Charles.
Yes, of course. We have plenty of them.
Stephanie, what about you? The Hartford obviously
Yeah.
must focus a lot on talent development.
So, like Hartford, 19,000 employees. Many carriers here have, tens, thousands of employees, and so I would always use a phrase of, we have to be walking billboards, and I have to change that for our industry. And it's back to Bobby's point about continuing to reinforce that, but we have to change it and make it more contemporary with today. So yeah, everybody uses LinkedIn. But that's not always the sexiest medium that is going to attract talent into it. So, Instagram, influencers, and to really get the message out. And I just fundamentally believe there's a big, big, big misunderstanding about how far-reaching our industry is. If lawyers, there's legal teams, there's claims teams, there's marketing teams. There's a whole host end-to-end of what goes into this industry. Technology, various CIOs, innovation labs. There's a whole host of capabilities that are on the carrier side, and then also on the agency and the brokerage side. Data and analytics. It's not just the carriers that have data and analytics teams. Also seeing it in agents and brokers and hiring. Different folks. So I just think we have to do a better job is really what it is, but we have to use more contemporary ways to get that message out.
Mm-hmm. And Drew, what about tech talent, not only at the early stage InsurTech ventures, but also our more mature insurance businesses? How are we attracting tech talent to the industry?
So, I think I'll talk maybe about the attracting sort of the new generation of producers a little bit. I think it's right that going after them sort of in new ways, telling the story a bit better makes a lot of sense. It feels like tech is also could be meaningfully helpful here. It does feel a little weird to sort of come out of university and all your friends are talking about tech-enabled things, and then you have you enter into a world that is slightly less sort of tech-enabled, and I think that is changing rapidly. And I really hate that I'm gonna sound like a broken record on AI, and I do think AI is gonna help here on the getting rid of the particularly annoying, mindless tasks that a new person would say, I just don't want to do this. So I'm probably quite optimistic because at the foundations of the career are really cool. You have a credible shot of running your own shop if you want to, after you learn the business, after you sort of build a specialty and can go out, and the future is going to be easier for you to do those things. So I bet you we're on a little bit of a cusp where that story is going to get a bit easier in the next 18, 24 months. I don't think I'm talking, 5 years from now.
Interesting. All right, so I think going back to overall, our best agencies, what are they doing? Stephanie, you clearly work with and select the best of the best. What are they doing from your perspective that stand out?
Well, I think Bobby hit on the crux of it. So a couple of points that I'd camp on to your comments is that I always start with philosophy. And so is the philosophy aligned between the carrier and the agent broker? And I tend to oversimplify. Many members of my former team are here, so they understand, but I call it the win-win-win. Is it a win for the client? Is it a win for you, the agent broker? And it is a win for the carrier. And so often, there's not that three-legged stool of a win-win-win. So constantly looking for that, that's one. Two, what I would say is alignment within the firm, not just in terms of philosophy with your carriers, but the mission for the community and for the firm. So again, listening, does the C-suite, the corner office and the firm, the agency, does it track with what the front line is saying? And all of you agents, you should ask the same thing of your carrier partners. Is the C-suite and the executive team, when you're chatting and meeting with them at different forums, does it track with what the underwriters and your sales organization that calls on you, does it track? So if you don't see that alignment, there's something amiss. So I always look at that in terms of philosophy. And then I think the final point that I would add to Bobby's comments is that being maniacal, the firm, being maniacal about not only their vision and who they're going to serve and their strategy, but their expenses. And if they understand their expenses and where they're not getting the value and where they're not using the full breadth of their own technology, people in technology and an agency, I gotta believe, are your two most expensive parts of your P&L. So that, and then leveraging all the digital assets that your carrier partners are bringing forward, because it speaks to Drew's point. I mean, you can spend your time working and delivering a cert or certificate of insurance, or the client who actually is working until 10 o'clock, needs it for 8 o'clock tomorrow morning, just wants to go in, let the carrier do that. Let them get it, they print it off, they've got it in 5 minutes, and the agency brings forward more higher order, higher value added services. So it's a combination of those things, but everything that Bobby said.
I love the reminder, Stephanie, about the win-win-win.
Yeah.
It's at times when anyone forgets their role in doing that and the importance of the partnership in the ecosystem where things go awry. Charles, let's take a different angle on the question. From the Big I's perspective, legislatively, in terms of policy, what's going on with the Big I in terms of supporting the independent agent channel right now?
Yeah, and so I quickly referenced it earlier. Active at both the federal and the state level. We talked earlier about legal system abuse, social inflation.
Yep.
So we spent a lot of time on that, primarily a state level issue right now, but working with our carrier partners on trying to reform the legal system. There are three certainties in life, right? There's death, there's taxes, and there's trial lawyers trying to abuse the legal system. And so, right, we have to fight that all across the country, state by state, and of course that plays into the strength of the Big I as an organization because we're a confederation of state associations. So I like to call that the grand differentiator. Sorry for the commercial about the Big I, but the grand differentiator for the Big I versus any other insurance trade association, whether it's producers or carriers, that we have that presence in every state capital. And being a state-regulated business, of course, extremely important. We want to, of course, keep it a state-regulated business. We're in the business of diversifying our risk, so we don't want to consolidate and concentrate that risk at the federal government, but there are also things that we can do at the federal level along those lines. So for example, we all know about third-party litigation funding and how much of a challenge that is. And there are some transparency pieces of legislation that are introduced in Congress that we support, that next week when we have almost 1,000 independent insurance agents coming to DC to lobby on behalf of the overall PC industry, we'll be making the case for increased transparency, particularly at the federal level on foreign investment via third-party litigation funding. And of course, also at the federal level, mentioned mitigation efforts and changes to the tax code that can incentivize some of that from the consumer level, which of course takes a little while to bubble up to improve the overall insurance market, but something else that we're focused on.
That's great. Looking forward to the progress. I think I'd be remiss if we didn't transition to a bit of talk about generative AI. There were so many conversations yesterday across all the different sessions, across dinners. Hey, how do I use this? And Drew, you alluded to it. People are not looking to do something fancy. They're not looking to change their underwriting models. They want to know how to take out those manual, tedious, administrative tasks that take their time away from what matters most, focusing on their customers and focusing on their carrier relationships. So let's start with you, Drew. What's your perspective on whether or not generative AI is usable for the distribution channel today? And give us some examples. Give us an example of where it's working really well. You've actually seen it out there working really well, and give us a cautionary tale as well.
Yeah. So just to give a little bit of that, I don't just jump on every hype. If you go back to one hype cycle of Bitcoin and blockchain, I mined my first Bitcoin in 2012, And every year after got more pessimistic that there was really any purpose on this whole thing than I did the year before. And so we never invested in anything. I've never invested in anything. This is a totally different thing. I'm telling you, the impact and the speed that we are seeing in our business is pretty remarkable. There's sort of a billion pseudo data points on this. If anyone knows the sort of most popular, most successful accelerator called Y Combinator, they just had a demo day. I think 70 to 80% of all companies in their entire cohort were effectively Gen AI companies. Okay, sure, people did that in crypto. It doesn't really mean anything. We are actively diligencing 2 early stage companies that were each created within the last 6 months. One was created within 4 months and is doing hundreds of thousands of contracted revenue. You never saw that in any. I've never seen that in a different hype cycle. In a different new piece of tech, it was always, yeah, this is gonna be amazing. It just, this has to happen and this has to happen, and 5-10 years from now, it's gonna be unbelievable. And we're seeing clients sign dotted lines for products that were built in less than 3 months. I mean, that is just unbelievable. And the reason it's possible is because our mental model, one mental model on this is ChatGPT comes out a couple years ago, and you can think of it as a sort of a Big Bang moment. When there was, before that, there were these workflows that people had that were very difficult for them to complete. Think processing large numbers of documents. But it was impossible for tech to really help them with it. So they just had to do it. After ChatGPT, and I'm using ChatGPT as sort of the catch-all for all Gen AI, after it, Gen AI can do that off the shelf. They can do that incredibly quickly. So all of a sudden you have an existing workflow that had an existing problem in it, and magically a new technology appears and you can just sort of instantaneously solve it. And that's why we're seeing that across the board. There's huge numbers of unknown questions about Gen AI, tons. For the probably one that you're thinking about is, if you know that Gen AI has a unfortunate tendency to hallucinate. I don't know if you guys know that, but it can just say stuff, and that stuff may or may not be true. But I was looking at a demo literally
like Wikipedia.
Yeah, we were looking at a demo last week of a company in E&S that process huge, effectively underwriter submissions, set it all up for the underwriter to better just quickly assess whether that's a piece of risk they want to write or not, and to solve this issue of, hey, do I truly trust what I'm seeing on my screen is what is reflected in these dozen PDFs and an Excel file? The system automatically, you can think of it as split screen. On the left is the submission. On the right is where it found it in the document. So, okay, that's moving pretty quickly to add a lot of trust to the actual user of the software. And we're only a few, the most unbelievable thing is the sort of speed of improvement. I think if I had to put a line in, there's a tendency for people to look at this technology and sort of extrapolate it to infinity, and sort of say, okay, so this is, you can imbue onto it like what's called AGI, artificial general intelligence, and then okay, now it's taking over the world and it does all the things, and there are no more jobs anywhere. I think what is more likely to happen is that there's a class of work that is being done today that it fits into that broad category of difficult for humans was impossible for tech. And that's not all of those things, but like certain chunks, particularly document processing, really the more mindless of the tasks, processing, analyzing, summarizing, and we're going to see a massive impact in a short period of time. I think that's going to, there's going to be some industries that are particularly impacted and most are just going to be sort of augmented, and it's going to be generally a really, really positive thing. One more just quick note on AI, and this might be too sort of cerebral, but it's a thing I think is interesting and can help people sort of get their arms around where are some limitations on this new, really important piece of tech. Gen AI is the output that comes from it. You type in your question and then it gives you an answer. That answer is a statistical output based on its training data. It is not manufacturing net new concepts.
Right.
It cannot do that as far as we know.
Right.
But the reason I'm bringing this up is because think about the impacts in two different types of producers. I'll put producer a little bit in quotes. Compare a specialist producer who's built a niche that builds relationships with clients out in the world. Compare that person to a call center-based broker who's taking a call in and closing the lead on the call. There's obvious differences between being in person and being not. Let's take that away. Just the call center-based broker, probably every word that is spoken on that call is recorded, can be transcribed, and thus can be put into a data set that the Gen AI can train off of. We're already seeing startups that effectively claim we're going to build a script and then a voice-activated response that is the best call center salesperson that exists in your call center. Because they have the data. The data is there to train on. They know all the words that were spoken, and they know the result of the sale. Did the sale happen statistically, or did it not happen statistically? That person who's building the relationship in the field, there is literally no data of the conversation is not recorded. And thus, how are you persuasive to XYZ type of person? And you do this over time, right? You build a relationship over time. There's, single digit to dozens to hundreds of conversations over days to years. None of that is today recorded, and thus none of it is in the data set that the AI is being trained on, and thus the AI can't even come up with the right answer, even if it had it. So anyway, I can understand the natural tendency to sort of just be like, oh my gosh, it's just going to take over literally everything. But no, there are things it does, and then there are things, because that's the way it works, it can't do the other things. So you just sort of keep that a bit in mind.
Thank you, Drew. Bobby.
Teresa, let me just add on to that. We tend to overestimate how much change is going to happen in the short run and underestimate how much change is going to happen in the long run. I think there's going to be a lot of change with AI. But as far as you, the independent agent, it's not something, as I see it, that you can, in your agency, figure out how you're going to use it, apply it, and give you a huge competitive advantage. I think what it's going to take is y'all's involvement with the big I, with NetView, with networks, aggregators that have the interest of a lot of agents and can spend the money to come up with applications, give you the tools that you need. Because I think AI has the potential to give the small independent agent, the mid-sized independent agent, significant competitive potential against the biggest brokers in the world. I think it can be a leveling tool that can occur, but it's going to have to be something that providers of the technology or groups of folks coming together that can invest the money and come up with these tools can use to your advantage, to your customers' advantage, to your employees' advantage.
That's great. Stephanie.
Yeah, just a couple of additional points to what Drew and Bobby shared is that I even think the nomenclature gets confused. So AI, everybody's using AI. Your carriers are all using AI today. To do a mini Hartford small business commercial, just for a moment, in terms of AI, small commercial at the Hartford gets over 1 million submissions a year, and about 80% go straight through, 5 minutes or less. No underwriter touch, and that's through the results of models and AI. Generative AI, to Drew's point, very different. I'm pretty confident, without being in a bunch of boardrooms, that all carriers are testing it. You said some very important points around the efficiency drags. Where are the efficiency drags in work process? And whether it's underwriting or legal or claims and that, in terms of going through that. But you got to have what comes out of the generative AI experiment with your subject matter expert next to it, and does it meet the subject matter experts, their trained versus, experience versus that, and then make sure that you're tracking for bias, right? If I'm a trained underwriters, you could talk to 15 underwriters and put a piece of business in front of them. They're all gonna have a different view based on their bias, if they had a large loss as a result of that class of business, et cetera. So it's constantly, so you have to have the human right next to what spits out from that, and I think in terms of early days. But I do believe, and I agree with Drew's point, the efficiency drains, there's going to be a definite benefit and lift. The other, though, so remember earlier I said, what's the positives and what are the watch areas? And so it's still uncertain how the regulators are going to view this. So today, there are state regulators that are going out to carriers and saying, we want to see all your models. Historically, those were largely pricing models, class plans, pricing models. They want to see the models that the operations team uses. Wow. They want to see the models that underwriting uses. And those aren't even generative AI models. So there's a sea change in terms of the regulators wanting to understand, get educated, and then what comes from that, what restrictions or not come out of that is still early. If it was a baseball season is just starting. I'm going to my St. Louis Cardinal kickoff tomorrow, opening day. So if it's baseball game, it's early innings, but it's gonna move fast. And then I think the last point I would make, and Drew hit on this, is that as you're building your books of business and think about the classes and the industries that you write, back to specialization, who's gonna benefit, who's gonna be protected, construction, and who's gonna go away. And it's not gonna happen overnight, but if we're sitting here, all of you sitting here in 2030, the industry makeup and the exposures and the pricing, it's all gonna continue to evolve and be different. And so that was the challenge I was always putting on my teams in terms of, there's the right now, but how is our book of business going to change and how are you preparing for that? So it's early innings, but it's going to change.
Well, Stephanie, you're bringing up the regulatory aspect. Of course, everyone is curious to see what the federal government's going to do for generative AI usage in general, but we do have, as you're saying, this nuance of the fact we're regulated at the state level. There's a lot of requirements on both agencies and carriers to submit information. We can risk losing our license to do business, et cetera, et cetera. There can be capital requirements, all kinds of things that could be implications for the insurance industry. Charles, any insight into where it's headed for the insurance industry in particular as we think about regulation of generative AI?
Yeah, and I wanted to follow up on something that Bobby said. Sure. Thank you for the commercial for the big eye. That's been my job up to this point, so I appreciate that. We'll take those plaudits. But and that's why we have our Agents Council for Technology. And as a matter of fact, Chris Klein, our executive director, is some out there in the darkness. I saw him earlier grabbing a cup of coffee. And that's why for ACT, we feel that the Big I is in a very unique position to bring those various stakeholders together to try to get some sort of consensus on these broader issues, right? Rather than ACT being in the present, in the here and now, in consulting and handling individual agency issues, being more of an advocate, not unlike government affairs, which is what your question is really speaking to. Advocate for the IA space, advocate for our carriers as well, kind of going to where the puck is headed rather than where it is right now. And so we're hopefully going to be modernizing ACT, and you all will be hearing a lot more about that. But on regulation and potential developments coming out of the federal government, when you have divided government, which we have right now, it's good and there's bad. The bad is it's so difficult, as we all know, to get things done in Washington, D.C., to solve problems. to act on the hard market that we're dealing with right now. Now, the good is they can't screw things up either, right? Because you can't get the parties to agree. And so right now, because we have that divided government, I don't see much coming out of Washington, D.C., the nation's capital, on AI regulation. But you also mentioned state regulation and state regulators, and in particular jurisdictions where it's a little less business friendly, where that heavy hand of the regulators is coming down on some of these developments on AI and beyond. And that's where we're just going to have to work together as an industry to try to influence that so we don't see that overreach. But there's always a balance, right? I mean, from our perspective, we certainly want our carrier partners to have that flexibility. On the other hand, sometimes it's really difficult for agents and brokers to explain to customers why they're seeing some of these differences in premiums and why they're not getting the coverages they used to have. And that's where the communication between the carriers and the IAs is so important. So then we can serve as that conduit to the consumers so we can have that win-win-win that we were talking about before in the alignment.
That's great. Obviously, this is an emerging topic, more to come, but really fascinating insights from a panelist today on generative AI. Thank you. We have just 10 minutes left. I'd love to end on a high note. I'm going to go down the line and ask each of you, what are you most optimistic about as you look forward for the independent agent? Charles, let's start with you.
Sure, yeah, I want to be optimistic. So now, in all seriousness, I think that the challenges that we're seeing now in the hard market, it really highlights the value of the independent agent, right? Highlights the strength, the customization, the advocacy, the choice that independent agents provide their customers. And I know that those choices might be somewhat limited right now in the hard market, but it's certainly more choices than the captive agents have across the street, right? We all in life always tend to see that the grass is always greener on the other side. But if you think it's rough right now for independent agents, maybe you have 2 markets rather than 6 markets. Think about being a captive right now, right? And having 1 market and seeing significant restrictions on capacity from the mothership. And so, I would say that we've been seeing over the course of the last several years, even before the hard market, that captive carriers are becoming more interested in the IA distribution model. I think it's smart for carriers to diversify their production and distribution. I think we're going to see more of that coming out of the hard market. I think it makes a lot of sense. We've seen a lot of captive agencies convert to independent agencies to also avail themselves of the benefits that you all know so well. And so that's what I'm optimistic about, that once we start seeing the light at the end of the tunnel, and unfortunately we're not there just yet, that it's only going to highlight the strengths and the value of the IA system, and the future's bright.
Great, Bobby.
I think there are a lot of positives, and one of the most significant I see is looking back over time is how resilient the independent agent is. When you look back to the financial crisis of 2008, 9, 10, and businesses were going under, revenues were just rocked, the median independent agent's revenues dropped by less than 2%. It is a very resilient business. It's a business that is a product that people don't choose to buy in good times and opt not to buy in bad times. They need it for their businesses, for their financing, for protection. It is resilient. And then you come up to a pandemic and the impact that had on the world. Independent agents were there. Working remotely. As a matter of fact, many of your firms are better equipped with technology and communications as a result of the COVID experience and having to work in a different manner. Very resilient. And seeing over this period of time the value of insurance agencies continuing to rise. It has never been higher, which is great for the firms that want to remain privately held because your businesses are worth more. It's great if you want to capitalize your asset and sell to somebody else. It is a great business. At the same time, the encouragement would not be to say, okay, we're resilient. I can continue doing the same thing I'm doing and enjoy the same success. And I would suggest that's not going to be the case. There's enough changing in the world around us, in your competitors. People are going to get better. Our industry is going to get better at technology, and you want to be there with it in doing so. in getting better people, operating smarter. And if you do, our sense is, my sense, our firm's sense is, what a great business, what a great industry that we're picking up market share. We can pick up more market share, and you can pick up market share from your competitors by just operating more with greater wisdom and tapping into the resources that you have available to help you do so.
That's awesome. Stephanie?
Yeah, I would, I can't help but underscore everything that Charles and Bobby stated, so perfectly stated. The couple of points I would add, though, is I mentioned at the beginning the economy is still relatively strong. Our industry is going to hit $1 trillion in direct written premium next year. So there's a lot of goodness there. So entrepreneurship is alive and well in our environment. And I look at independent agents and brokers as sort of, the spirit of that, but then taking that and matching that with the spirit of business owners and, small commercial and, personal insurance clients and your larger middle market, large account clients. And what I would add to this is that if I step back and I reflect on the last 10 years that I led small commercial at the Hartford, and I talked to thousands of agents, thousands of small business owners, got thousands of input through surveys, et cetera. In the small business community, what we heard over and over and over from small business owners is that they want not to be treated like a number. They want someone to be able to help them protect and grow their business because it's their life passion and how they serve the community. Price was like number 4 or 5. It was never number 1. And oftentimes it was all of you, the agents and brokers, that's who they look to help them navigate that. And so it's a great service and a community. It's really an honor and obligation to serve our policyholders, our communities, and choice and trust and entrepreneurship, I just think speaks to it. And then finally, I retired 5 weeks ago, but in partnership with Lightyear Capital, I just joined the board of InZone Insurance. So if I didn't believe in agents, I wouldn't be doing that. It's my next journey. So I'm very optimistic.
That's great.
Yeah.
True.
Yeah, I think the idea of the resilience of the model, the strength of the model, it's super exciting to us that the sort of recognition of the value of producers is really emerging. I mean, it did take a lot of my industry figuring out all the things that weren't true to first finally figure out what is true. But we're pretty much there, and it's super exciting. Viewpoint, we're entirely dedicated to the producer, as I said, but we also have a special industry network. We've got 90 insurance partners on that network, 65 carriers are on our network, all just directly connecting the startup ecosystem with the insurance industry. And they're all extremely excited and to fund the next generation of technology to help the independent producer. And that's just been sort of amazing and gratifying and really, really exciting.
That's great. Well, Charles, Bobby, Stephanie, Drew, thank you so much for your time. Such incredible insights. Really appreciate the fact that you were here with us. Please join me in giving them a round of applause.
Thank you.
What I say, super cool conversation, right? Thank you so much, Teresa Chia, for leading that discussion. And thank you, panelists, for making us think a little bit. Hope you got a pen and paper out because there's so many gold nuggets in that. And guys, if you have not subscribed to this channel yet, make sure you subscribe and not miss any more episodes. We've got some great episodes coming up. And ladies and gentlemen, if you missed Accelerate 2024, or even if you went and you want to make sure you come back again, be on the lookout for Accelerate 2025 in Charlotte, North Carolina. It's going to be such a great, great time. Hope I see you there. Have a great day, ladies and gentlemen. See you next week.